Yeah, Byron, that's that's the puzzle. That is the puzzle of finance. What discount rate to use? That is literally the puzzle. That is what almost all finance boils down to. What does that mean? Discount rate is one of these things where we just don't know how are we thinking about the risk of a company. Let me show you a quick thing. I got Bloomberg on the other screen. I don't want to show you the evil empire software that we're making a much better version of, but let me show you just this one thing. So this is the historical return histogram on Bloomberg. Very few people use this function. I actually updated this function about 15 years ago with my messages to Bloomberg. I am banned from Bloomberg. But the thing about Shkreli is Shkreli finds ways around bans, all right? You can't ban the snowman. Yeah, I had GPT 1.0 a while back, GPT with reasoning. Can't ban the snowman. Oh, Bloomberg does not like me for a number of reasons. One is I'm trying to compete with them. So the question is, what is beta? Why do we care about beta? Why do we discount cash flows in the first place? All of these questions are really important. Sure, but we're worrying about risk, right? We're worrying about risk to our cash flows. Here's another function on Bloomberg. I think it's a little newer, called equity risk premium. And the risk-free rate is here, right? I think this is corporate bonds, and then this is the equity risk premium. The beta is the interesting thing here. Do we want to use beta to represent risk? Does that make any sense to you? Doesn't make a lot of sense to me. I pay for Bloomberg, yes. So like to me, the beta of Adobe, which is kind of like a the beta is high beta. Here's I guess this is versus the other S&P constituents. Yeah, pretty sure. Or are these daily changes? Let's see. Okay, no, these are the price movements. This is the one change distribution, percentage changes. So R squared is correlation. Here's low correlation. I'm not sure that beta is the best measurement for risk. I mean, most people don't think it is either, right? This is 52 weeks, it looks like, right? Weekly return. And yeah, so beta is volatility, but it's also and it's supposed to represent risk, and we use it in Black-Scholes, we use it in equity risk premium. It shows up all over finance. And it basically tries to measure how, if the market's up, how much more or less will the stock be up. But the way I think about cash flows is very different. And I think the way Buffett thinks about it is very different. It's really about, like, what is the risk that I'm going to get this or not? It has nothing to do with the stock price, right? You don't use beta in Black-Scholes? Well, you use them in implied vol, right? Maybe we used a different sort of the same thing in a lot of ways. Maybe we used a different, like, barrier option valuation model, but you can use Black-Scholes too. So yeah, I think the risk to the actual cash flows is what matters, and some companies have different risks. Like, the risk to Adobe is the risk of growth more than it is the risk of downside likelihood. And that's a lot like hedge funds. In hedge funds, the downside vol matters way more than the upside vol. You want asymmetric volatility, right? So you can actually be very high beta and not have downside vol, which is kind of crazy if you think about it. So to me, we were looking at corporate bonds yesterday. I think Adobe is super safe. And we can actually see where their debt trades. Let's see, they don't have too much debt, but let's take a look. They have 2034 bonds. They priced them at 5% a while back. They're trading at like 4.3. So the bond is trading at 4.3. Why would we expect to get 7% out of the equity? Shouldn't we expect to get less than that? The bonds, the risk of defaulting in the bond is so low. Now the equity is, of course, priced a little differently. And one of the things we have to do is just adjust our valuation for different businesses. Like, so if I take the discount rate here, right, and I want to compare it to, well, what are we discounting our Microsoft cash flows by? Let's take a look. 7% as well. Well, Microsoft has a lower discount rate than Adobe, right? Microsoft's a bigger business, it's more diverse. It's really, the risks to its cash flow are very different. So I can't really in good faith say Microsoft should be at 7 and Adobe should be at 7. Adobe should be maybe at 8 if that's the case. Changing the wrong one. And if that's the case, it looks a little overvalued if the growth slows to 7% and then in terminal 1%. It's a bit overvalued. We got to double check cash flow because I think their cash flow is a little higher than this. So maybe it might be that, like, maybe this represents it a little bit better. But either way, it's not massively different.